Hey guys,
Good.
welcome to another Monday market update with Steffani and Rozella over in Spokane, Deer Park, the whole area over there they cover. Hi ladies, how's it going?
Hi, how are you?
Good. You're in your car. I love that. You'll make it happen no matter where you're at. That's just a good start to this. Is it cold over there? What's the weather like just as a quickie?
It's rainy and wet outside. Stephanie has a signing this morning out in Liberty Lake, Washington.
Oh, okay,
So,
that's where you're at. The economic data came out yesterday. Core inflation was down lower than expected. It had a dramatic impact in both the stock market and the bond market. Rates really rallied, which means they came down significantly. So if you have not locked your rate yet, now would be a really good time to think about locking that rate. Although I will tell you, one of the reasons why inflation came down is there's inflation, the metric for inflation that they measure is broken up into different categories. There are certain things which are really volatile, like energy and housing, it's called, which the Federal Reserve will sometimes move from that so they can see a core inflation without those items. But they also look at it with those items. And housing came in lower than anticipated as well, which is what drove core inflation down. And the key here is lower than the expected rate is going to be. So what that means is that the Fed may not have to raise rates again this year. They're meeting, I think, December 13th is the next time the Fed is meeting. And they may not increase rates at all. It looked like the economic data is supporting that we're having possibly a soft landing, but certainly maybe no more rate increases. And the bond market reacted greatly to that. So that's kind of cool.
sorry, just for a sake of a number, what did they come in around? Mid sixes probably right now?
No, it's lower than that, Stephanie. Good question. It came in a little above 4. They were
Dang.
anticipating, I think they were anticipating 4.2, and I think it came in 4.1 is what they're looking at right now. And their target rate is 2, so we got a ways
Yeah.
to go, but it's coming down on its own now. I just heard this morning, as a matter of fact, consumer spending is lower this month than it was last month, which means people aren't buying as much stuff, which
Yep.
means things are slowing down and all of that. So that's actually good news from an economic perspective.
So right now, essentially a buyer could go out and start shopping again and potentially rate lock around that 4.5,
No,
5%
no,
maybe.
no. No, 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 no. Sorry. That's the core rate of inflation that they're looking
Ah,
at is the 4%.
okay.
Rates are still in the high sixes, low sevens. But here's the perspective. I locked a client with a conventional loan less than 30 days ago. That same loan today would cost 1 full point less in fee on a $700,000 loan. So if we locked
Sure.
it today, that client would pay $7,000 less to get the very same rate or of course, they would choose to take a lower rate and keep the same fee structure.
Inflation, obviously, these are good things to see these numbers coming down because it's going to obviously kind of, like you said, bring us in for a softer, healthier landing than the turbulence we've been on, which is
Yep.
like
Yep.
a wild ride.
Yeah, it's been great. And here's another data point that's interesting. It's estimated, and I don't know the source on this, but I can get it for you all, that for every 1% decrease in rate, it frees up about 5 million people across the United States to buy homes that are not
Okay.
currently able to buy now. So when rates go from 6.5 to 5.5, you're going to have a bunch more buyers in the marketplace that can now qualify for homes.
Sure. Okay. That's so good. And my takeaway from this keynote is that if you are a buyer who somehow can afford right now with the rates that they are right now, absolutely go start purchasing or shopping at least because you still have some negotiations because of your rate. And then if the rates do dip, refinance at that point. But now you've also secured a really, really good price point, which is how you get that.
Yep. And I've been playing, we have a tool that will show you specific data for your area on what's expected for appreciation. And I've been looking at different areas because we do loans in different areas. And the appreciation for the next 5 years, the annual appreciation for homes is still in the 4 to 5% range almost everywhere. So that means that $400,000 home in Spokane is going to be worth 420,000 next year or that amount. So if you wait,
Okay.
you're losing $20,000 of equity in the home. I mean, it's the same discussion we've been having. It's just that the fruit's starting to be born here. The rates are starting to come down potentially anyway. I think it's going to be a slow and perhaps erratic decline. over time. It's going to be a year before we really see much lower rates, but I think they're coming that direction. And I think when consumers feel that, and they are going to feel that, you'll probably start getting more buying activity at that time.
Sure. That's good.
Yeah.
This is good news in our world.
Yeah.
Yeah.
Yeah,
it's good news. It was, I had clients calling me today. What about my rate? Can we relock? Oh, so to speak to that, okay. Some lenders will allow you to not float the rate, to float down the rate lock at the time of docs, like we will, for instance. So if you've locked at a higher rate and rates are significantly lower, it has to be fairly significant that they've gone down. When you're ready to draw loan documents, you can get a lower cost for that very same rate, or a lower rate potentially if you choose to do so, because rates have dropped. Not all lenders will do that. So you want to chat with your loan officer up front and find out if you have that capability, given that we may be in a downward interest rate trend now, for a while.
How late on into a transaction can you float down? Like up until closing, or does it have to be like up until underwriting, or at what point could you float down that rate?
If your rate is locked up front, and typically given the market that it's been, we lock rates very quickly because it's erratic and going up. So if it's locked up front, you can't float down until you're ready to draw loan docs with us. And I think that's probably true with most lenders. But you can choose to say, well, I think rates are coming down. I'm going to float my rate and not lock. And then you can lock at any time. And just to expand on that a little bit, there are different costs for locking at different time periods. The normal lock period is 30 days or 45 days. And a 45-day lock is slightly more expensive than a 30-day lock because the interest rate risk is on the lender. So they're going to charge a little more for that extra risk they have for that extra 15 days that they're going to maintain that rate. But you can also do a 15-day lock, but you can't do a 15-day lock until you have what's called a clear to close, which means the underwriter's underwritten the file and they're done with it and they're ready to go. You can then lock for 15, which is cheaper than 30. And to answer your question directly, you can wait all the way to the very end and finally lock your rate right before docs if you chose to do so.
So somebody who was short on closing costs that had a higher rate and that was the issue could then go back in, get that lower rate today to save that rough, you were saying like 1% on.
If they had their underwriting ability to do so and it was structured within their financial institution. Yes, potentially.
Yeah, and to be more clear here on that float down capability when the rate's locked, you don't get necessarily the market rate when you float down if the rate is locked. You just get a better rate than what you had. Someplace in between is probably where you're going to land. So then it's going to say, yeah, we'll give you a little bit better, but we're not going all the way down here. Your rate was locked.
She knows why I'm asking these questions.
We have another transaction. She's already in.
I was like, wait.
Got it.
Okay, perfect. That's good news. I like what you're saying today. We'll talk again next week. Keep it up.
That's right. I'll let you know next week how it's going. Absolutely. We have a really good rate predictor site that we use that is good for kind of long-term-ish what the trend is, but also day-to-day if you should lock or not when it's erratic. So we can chat about that too.
All right, awesome.
So ladies, what's the word over there in Deer Park or Spokane or wherever you're at right now? Liberty Lake, I guess. How's the market?
It's still moving. It's slow. And we're seeing just a lot more with appraisals coming back. Like we said, conditions or low.
Yeah. Well, just to specify like why it's slow, it's not uncommon to have like kind of like a mellow slowdown right now because of the holidays, because we have Thanksgiving, this New Year coming up. It's not unusual for things to kind of slow down right now. So that shouldn't be alarming to anybody.
But again, it goes back to like every single year when we roll into this time, this is my favorite time of the year because this is when you see
everyone else kind of take off the gas, and then that's our opportunity to really still provide the knowledge and provide the work that people are still needing.
But then for sellers, a lot of sellers, this is when they're going to offload for tax purposes, all sorts of things, like everything's been changed.
Your investors,
yeah. So this is when it's, you can get really heavy into picking up good deals or things that may have been on the market that they're just more eager to sell, whatever it may be, owner carry contracts. Like right now is the time to get creative and really be paying attention.
Very good.
So, yeah.
Yep.
Well, I like it. Always fun to chat with you guys. Appreciate it.
Yeah.
All righty. Well, we are going to go off to another meeting.
Yes.
Because we just run and go. That's what we do. But
well, thanks for your time today, ladies. Really appreciate it. We'll chat with you in a week, shall we?
Yes, and thank you for that awesome market update.
Yes,
we appreciate
thank you.
that.
That's positivity heading into our weekend.
Yes.
Yep. Good news. Good news. See you later, ladies. Thanks.
Thanks. Bye.
Bye-bye.